BNN.ca.
We have some energy-related questions coming up here. Richard's in Toronto with one of them. Go ahead.
Hi, what is your thoughts on Canadian oil giant Sunco? I bought it 3 years ago, around $33.50. Just wonder what is the company future. Okay. Thank you.
Richard, over the last 12 or 18 months, we've avoided the oil sands companies. One of the big issues was the differential that they were making on their oil versus West Texas was very significant, like as much as 30%. So they were getting a significantly discounted price for the oil. Recently, the differential has been narrowing, and so it's becoming more profitable for them. Technically, Suncor and CNQ may have put in a double bottom and maybe turning higher. We're not there yet, but should energy continue to firm up, it's a company that we would take a good hard look at. We've been looking at it recently. So far, we've been focused more on the yield companies and the lower cost producers that are benefiting from some of the new technology. And oil sands, we focused on just investing in the infrastructure there. So I don't think you're going to get hurt too badly. You could buy it here. There just may be better companies in the very short run. But technically, you know, if it were able to get 6 or 7% higher and get above the highs from earlier in the summer, then it might get more attractive.
Further afield, but still with oil, we have Petrobras. This is a question from Dosanjh in Surrey, BC. Hi there.
Hello.
Hi, go ahead.
Hi, Dosanjh.
My question to your guest is regarding Petrobras, PBR, New York.
This is a tough one. We owned Petrobras at one time a few years ago, and the prospects that they have for production growth offshore Brazil are tremendous. The problem is the government really has used their stake in this business as a lever, and it's less about running this company for a profit and more about what can the cash flow do to help employment growth and other social policies in Brazil. So we find in general, any time a government has a major stake in a company, in certain countries, it can have an impact on their ability or want to make a profit, and it's been in the way of this one. So I think you want to avoid this.
And the government apparently insists on the oil field services companies being local, being Brazilian, and so there's a lack of a competitive process there, it seems.
Right. It kind of reminds us of the old days of the national energy policy and some of the problems with that. And realistically, there's a lot of global investors who want nothing to do with a company where there's a government meddling in the business affairs.
Guido's in Brampton with a question. Go ahead, sir.
Hi, I'd like to know about Brookfield property. How it's going?
Sure.
Okay.
So Guido, Brookfield Office Properties, a great company. They've got great assets, AAA assets, one of the best portfolios that there is. Brookfield as a whole have their various divisions, each of them long life assets, and Brookfield Office Properties is one of them. So I would be comfortable owning the stock. It's consolidated over the last few weeks, and you get a pretty good entry point here. It's a great asset.
But you do not hold it?
We don't own it currently.
You don't, not right now. Here's Dean in Kelowna, BC. Hi, Dean.
Hi, Mark. Thanks. Hey, Dave, both percentage averages in Canada, ignoring the utilities, are sort of like in around 60. In the U.S., are getting up on 80, and they haven't rolled over. And I'm just wondering, how would you use this information? And then if you get time, Crescent Point Energy. Thanks.
Sure. The question is, he's asking about bullish percent, and this is a measure that measures the percentage of companies within a universe of companies, say the Canadian stock market, that are participating in a rally. And the breadth of this rally has been expanding, haltingly in Canada, a little bit better in the U.S. U.S. has been the best performing market in the world. Canadian market has been underperforming. So we're seeing improvement. The way we use this is, as long as breadth over time is expanding, we're comfortable being invested. And so, as I said earlier, we're cautiously optimistic in the short run. We have some concerns about later in the fall, but at this point, things are showing some improvement. We have more U.S. investment than we would tend to have. We've hedged the currency back to Canadian dollars. We say you take the same process and apply it to a number of different industries, and energy is one where we're seeing expanding breadth. And so when we enter a new sector, we tend to go to the leading companies, and Crescent Point is one of them in the energy space. So we own Crescent Point. They've got a great portfolio of properties. They've got there's a nice yield attached to it, and we think that this is one that can perform quite well.
All right, right now it is time for the Market Call Minute. Clayton in Union, Ontario has a question on Silver Wheaton, SLW.
Silver Wheaton is a company that we own. It's another one of these royalty companies on the silver side. I think that royalty companies are interesting in that you get a play on production and revenues without having risk on the cost of production. And so we like Silver Wheaton for that reason.
Quite a run there on Silver Wheaton. Harry in Toronto on CNQ.
Canadian Natural Resources, same story as Suncor. Chart shaping up, looks more interesting. We don't own the stock currently, but it's one we could certainly consider.
Ernie's in White City, Saskatchewan. He'd like your opinion on Canadian utilities.
The utilities group as a whole has been correcting recently, and I want to just touch on this theme. Dividend growth is more attractive than high dividends that don't grow. And so we're more focused in dividend growth, and the utilities have a little bit less dividend growth.
Paula in Calgary on PepsiCo.
PepsiCo and the Consumer Staples Group, food and beverage, quite interesting. Group's consolidated a little bit recently. I'd prefer to own Coke to Pepsi, but you know, they've increased their dividend something like 40 years consecutively. Strong cash flow, strong balance sheet. You could buy it. I prefer Coke.
Okay, we'll wrap it up there. Thanks for all your emails and calls today and tweets as well. We got through a lot of topics and companies. Let's take a short break. We have top picks on the other side with David Burrows.